Hey guys, Aaron here with Carnivore Trade. So I want to do a little special video here today, and I'm going to review the recent trade that we took on Lululemon. And this was an earnings dump. It was a trade that I honestly I liked so much that I doubled up on it. So I have obviously my swing trading service, and we have a day trading service with a live day trading room, and we traded this level in both of them because I think it's swingable as well as obviously day tradable. So kind of a couple of things I want to talk about in this video is kind of how to trade earnings dumps, because there's a few rules that I think that people should follow, or at least things that I've kind of picked up in my time doing this through getting burned. I've definitely gotten smoked, definitely been on the wrong side of earnings dumps before. Usually one of the rules of thumbs that I tend to follow, at least for swings, is generally, I like to wait 3 to 5 days after a big earnings dump or even an earnings pop, if you're looking to short, before entering. But I had so many good signals on this one, I had to take it here. And it still carried some risk. I mean, whenever you're trading off of earnings, there's things that can happen. And again, I'm just going to give you some tips here. That's not the be all end all. It's nothing that anything I say in here can fail, right? These are just like tips and things that I've picked up over time, and I'm going to explain exactly what I saw and why I felt comfortable buying it. But in any case, to get into it here, so obviously Lulu today down big time on earnings. The big deal was that they lowered guidance. And, again, there's always that, especially in this environment, inverted yield curve for almost 2 years now in the 210s. There's the fears of, a slowdown, stuff like that. So they lowered guidance, and stock got hit pretty hard. One of the things that jumped out at me immediately, obviously, other than the dramatic move, I did have a proprietary signal that I thought could trigger. I don't want to get into it because it's a little specific. Plus, it's not really relevant to exactly why I took this trade. So essentially what that would have been if it had hit this morning, this should have resulted in a big pop, right? On the open, we should have popped immediately. The algos should have came in and swooped that up. Very much like, just to give you an example, what happened with Snowflake here a few weeks ago, right? So the low of the day on Snowflake, after their dump, their CEO stepped down. Let me pull it back. You can see it gapped down, it put in a low of the day seconds later, and you had a nice rally and pretty much into the end of the day, and actually even gapped up the next day. So if you caught that and you left a runner, you actually did pretty good the next day. I was actually personally watching this. I was hoping it would get down to 175, 173. You can see the 50% fib right there. It never quite got there. But in any case, I had a signal that if it triggered, it should have given us one of those. It didn't, obviously. However, that doesn't mean that you can't trade it, right? There's other things, there's no one be all end all. And I stuck with this, and I said in the trading room pretty much all morning, I was like, look guys, keep an eye on Lulu, keep an eye on Lulu. And so basically here's what I kind of looked at throughout the day. So in my time in looking at earnings, earnings washouts, a couple of things. If you're a new trader, it's important to understand there's forced selling that goes on. So a lot of, newer traders or average investors think that when a hedge fund buys a stock, they just say oh, we're going to buy 10,000 shares of Lulu or X amount of shares of Apple or whatever. That's not how it works. They have calculus programs, computer programs that tell them exactly how much they can hold of something as per their set risk parameters, right? So if your max risk on a stock with a 1.3 beta is 15%, right? That stock goes down 15%, you have to sell some of it. You don't have to sell all of it, but you have to sell enough to stay within that risk parameter. Well, when you have a stock like Lulu that actually, has a pretty low beta, and it moves down 15, 20% in one pop, you have to sell a lot of it if you're holding it, right? So there is forced selling. Additionally, there's margin calls, right? Actually, yeah, Lulu only has a 1.3 beta, so it's not too big of a mover. So when it moves 20%, that's a big deal. Catches institutions off guard. So they're forced to sell. So when you don't see, kind of like a general rule of thumb here is, I'm using a 10-minute chart here. If you don't see a bounce right away, or if you don't see a bounce by 10 a.m., and by bounce, I don't mean this, I mean like that. It's probably going to sell into the lunch hour and maybe even into the 2:30 time frame. It might even sell off all the way into the close and then likely find some type of dead cat bounce the following day, especially if it gaps down. So that is something to watch for. And I essentially watched this all day long. And it pretty much just, hemorrhaged for the first, third of the day here. And I kind of expected that when I saw that it didn't bounce immediately. I said, just step aside. We're going to casually watch this here. There's a level at about 385. And I even called this out to the swing trading group last night when I was looking for it. And I said, ironically, in the trading room this morning, I was like, we're not going to, we're not getting to 385. Like, it's already down 12%. It's not going down there. And then, around 11 or 10:30, it started going down. I was like, well, we might get down there. So what I was looking at is this 50% fib from the 2022 low. 380, 360, 385, right in that range. We didn't quite get there, right? We didn't quite get there. I bought it anyway, though. I felt that we were close enough to the level that downside was limited, and even if this thing wanted to continue lower after that, the likelihood of a $5, $10 bounce was pretty high. And I was also looking at, obviously, the 10-minute. You can see it had a little tail candle there, kind of like a bottoming tail. 15-minute, you had a similar look. And then hourly obviously ended up playing out. But I did enter at 389.97. So right off the lows, about 3 points off the lows here. We got a pop immediately, came back, never took the low out, and then it just took off from there. So it ended up being, we got like 1.2, 1.25% on the majority of it in the trading room, and we still have a runner right now. The swing trades are obviously nicely in the money on it. Why did I do this? It didn't get to the 50% fib, right? Normally, you guys know I like to wait for a pierce of a level, and I didn't do that. A lot of screen time, a lot of experience. It's hard to explain just why I just kind of knew, I wouldn't say knew, but had the thought that it might bottom there. But another level that I called out in the trading room too is 389. And the reason I called that out is we just remove this fib here and we go back. Let's go back to a weekly, go all the way back here. So you're going to see this pivot here in 2020 at 400. So 399.90. Then right below that, okay, 384.05, 385. What's going on here? Do you see anything that makes you think that this vibrates at 385 to 400? So 400, can't get above it. Back test 387.37's high. We come back down. By the way, beautiful retrace there. I wish I had seen that when it happened. But in any case, back up. Can't get above it. Can't get above it. Back test. We get above it. We break down. Back test here. We go down here. Back test here. We go down here. Back test here. Higher lows. Then we get stuck at 385 for about 6 months. Try to get above it. Gap up on volume. And then zoom in here. Right there. What's that? So anybody who's taken my course knows that's a test candle. What's a test candle? It is when you spike down intraday and then close back up. Same thing in the inverse, like this. You spike up intraday, then close back down with a nice tail. Where did it go down to? Oh, right there at support. So I knew there was going to be a level around 389, maybe a little bit lower, 385. And once I saw that reaction there, that was good enough for me. I mean, again, like I said, Could we have rolled over here and gone a little bit lower? Yeah, absolutely. Starting to get a little divergent there on the RSI. 15-minute, in the basement. Daily, in the basement. It's likely going to get some type of a bounce there. So, again, I feel like this is just kind of a big lesson here in the methodology. But again, just a couple of things that I look for as far as earnings washouts. Again, they're very dangerous to trade. I recommend really studying how different stocks move, and especially if you're not familiar with the stock. I've gotten blown up before. One I'll just share with you was last year on UPS. Again, familiar with the name. We had this big washout on earnings, and I got run over on it. Not too familiar with how the stock trades, at least on an intraday basis. And that's something that can certainly be a challenge if you're looking to buy something that's getting washed out. But pretty familiar with LULU. Also, like, this company makes money. Like, they have a really fiercely loyal customer base. Yeah, they guided lower, but plus, and we're going into a Friday. Into the weekend, it recovered about 400. I think investors are going to say, look, maybe we panicked a little bit there as it recovered back about 400. You know, it's a money-making company. Now, if this was a company that was unprofitable, I probably would approach this completely differently. I would have waited for like the most extreme level imaginable. But okay, so just giving you guys a little review here. I know I'm rambling a little bit here, but again, big points to take away. If you don't get a bounce immediately, right off the open, or at least at 10 a.m. And by the way, even if we got a bounce here, this can be a lower high. Be careful with that. I've seen it, this happen. So be careful with this. But if you don't get a bounce right away, it's likely going to sell into the lunch hour and maybe even into 2:30. So you really need, if you're gonna trade that after it hasn't shown relative strength on the open, you need a really rock solid level. And as you can see, this has been a huge level here for the last 4 years. Additionally, below that, like I said, we had backup, right? In case I was wrong initially, we had that 50% fib in case it overshot a little bit. And, it ended up working out pretty well. So everything was on the up and up. So anyways, guys, hope this helped out. If you got any questions, let me know in the comment box. Let me know if you've gotten run over on earnings. Let me know your success stories, your horror stories. And you guys take care. Have a great rest of your weekend. I'll see you guys all next week.